Welcome to Global Trade for Beginners. The dearth of information in global trade has kept most people away from it. Some have attempted to venture but got their fingers burnt. On Global Trade for Beginners, we bring you short courses that allow you to take on international trade. When you go through these courses and pay attention to the things you learn in it, you are sure to come out well equipped to make informed decisions on international trade transactions. Hello, I'm Ade Tokunbadeoye, an export consultant at Fortress 20 Global Limited in Nigeria. Today's course is on export basics for financial professionals. Throughout my international trade and export career, I've so far encountered just a handful of financial professionals who truly understand exports. Many lack a clear understanding of how exports work, which limited their ability to develop effective products under structured trade finance. By the end of this course, you'll get an overview of international trade, you'll identify the key stakeholders in the export process, and understand the roles of financial institutions in exports. The key learning outcomes of this course are to understand the overview of international trade. You should be able to define international trade and explain the significance of exporting in the context of global trade and economic development. Number two, you should be able to identify export trends and opportunities for financial institutions. You should understand current trends in global trade, such as the shift to digital solutions, the growth of green finance, and the impact of regional trade agreements. Number three, recognize key stakeholders in the export process. At the end of this course, you should be able to identify and explain the roles of the key stakeholders in the export process, including exporters, importers, banks, governments, agencies, and trade facilitators. And lastly, number four, you should understand the role of financial institutions in exporting. By the end of this course, you should be able to explain how financial institutions facilitate payment, how they offer trade finance products, and manage the risk in the export process. This course will cover very important topic areas. They are: number one, the definition and importance of exporting in global trade. Number two, export trends and opportunities for financial institutions. Number three, key stakeholders in the export process. Number four, the roles of financial institutions in exports. Number five, the conclusion. Are you ready? Let's get started then. What is exporting? Exporting is when goods and services made in one country are sold to customers in another country. It involves moving products across borders and is a common way for businesses to reach international markets. Exporting can be done directly by selling to foreign customers or indirectly by selling to middlemen or trading companies. Why is exporting important in global trade? There are various reasons why exporting is important in various trade. Some of these reasons are: number one, for economic growth. Exporting is key to a country's economic growth because it opens up markets beyond the local demand. It helps create jobs, it helps to increase production, and it boosts the overall economy. Number two is increased revenue and profitability. Exporting gives businesses access to new markets. This helps them to diversify their income and possibly increase sales and profit. It also reduces the reliance on the local market, which helps the company to spread out their risk. Number three, market diversification. Exporting helps businesses rely less on one market. When the local markets are full or are struggling, companies can reduce their risk by reaching out to international customers. Number four, foreign exchange earnings. Exporting helps a company or a country to generate foreign exchange. This foreign exchange can be used to import essential goods and services and contribute to the national reserve and stabilize the currency value. Number five, enhancing competitiveness. Entering the international market boosts competitiveness by driving innovation, improving quality, and increasing cost efficiency. Competing in various markets often pushes businesses to adopt global best practices. Number six, access to larger markets. Exporting gives companies access to much larger customer base. This creates opportunities to expand operations and grow their market share globally. We're still looking at the importance of exporting in global trade. Number seven, job creation. Export focused industries usually create more jobs, both directly and indirectly. Directly in production and indirectly in areas such as logistics, marketing, and finance. This helps lower unemployment and strengthens the domestic economy. Number eight, increase production efficiency. Expanding into international markets usually leads to higher production volumes, which helps lower production cost per unit. This makes the businesses more competitive both at home and abroad. Number nine, strengthening international relationships. Exporting builds stronger economic and diplomatic ties between countries. This leads to trade agreements, collaborations, and partnerships. Nations that trade together are more likely to have stable political relationships. Number 10, transfer of technology and skills. Exporting helps domestic companies learn new technologies and skills and different processes by working with international partners. This exchange can lead to industry progress and innovation. To put this all together, exporting is key for economic growth, market expansion, and innovation. It benefits both national economies and individual businesses by opening up new markets and boosting competitiveness. Now, let's examine the current trends that are driving exports. Some of these trends include the rise of emerging markets. Emerging economies, especially in Asia and Africa, are becoming important in global trade. Companies like China, India, and many African nations are quickly growing their exports, creating opportunities for financial institutions to support their businesses from these regions. Number two, digitalization and e-commerce. E-commerce has changed the global trade. It makes it easy for small businesses to export worldwide. With the growth of cross-border e-commerce through platforms like Alibaba, Amazon, and Shopify, there's a rising need for financial institutions to provide digital trade financing solutions. Number three, green and sustainable exports. There's a growing demand for eco-friendly products and sustainable trade practices. Financial institutions are responding by providing green export finance options linked like sustainability linked loans and export credits for companies that meet ESG standards. Number four, intra-regional trade agreements. Regional trade agreements like the AFCFTA are promoting intra-regional trade. These agreements create opportunities for financial institutions to provide localized export financing and trade facilitation services. Number five, the shift towards services exports. The global economy is shifting from being goods oriented to services oriented. Sectors such as IT services, consulting, healthcare, education, and financial services are growing rapidly in terms of exports. Financial institutions are finding new ways to support service based exports through working capital and trade finance solutions. Number six, supply chain diversification. Companies are spreading their supply chains to avoid relying on just one country or region, especially after COVID. This trend gives financial institutions a chance to provide trade finance products that help their businesses manage complex multi country supply chains. Number seven, technology and fintech innovations. Fintech is changing traditional trade finance. Tools like blockchain, artificial intelligence, and smart contracts are making payments, document checks, and credit assessments faster than they used to be and more efficient. This creates new chances for banks to work with fintech companies to provide improved trade finance services. Where are the opportunities for the financial institutions? The current trends in exports are the opportunities for the financial institutions. They provide an opportunity to create products and expand their foreign exchange earnings. Some of these opportunities are expanding trade finance services. Financial institutions can offer a variety of trade finance instruments, such as letters of credit, documentary collections, and supply chain finance. Expanding into undeserved markets and sectors can increase client base and enhance profitability. Number two, digital trade finance solutions. As more businesses, especially SMEs, move to e commerce platforms, banks can support by offering digital export finance services that provide faster and more accessible financing options. Examples include automated credit approvals, digital LCs, and online invoicing. Number three, supporting SMEs in export markets. SMEs often struggle to access traditional trade finance due to a lack of collateral or credit history. Financial institutions can tap into this market by developing customized products such as unsecured trade loans, export credit insurance, or invoice factoring. We're still looking at the opportunities for financial institutions in exporting and international trade. Number four is green finance and sustainability bonds. As exporters increasingly focus on sustainable products and ESG compliance, banks have the opportunity to offer green financing options. This includes green bonds, loans for clean energy projects, and financing for companies engaged in environmental friendly exports. Number five, foreign exchange and hedging services. Exporters often face risk related to currency fluctuations, especially when trading across borders. Financial institutions can provide foreign exchange services, hedging instruments, and currency risk management solutions to mitigate this risk for exporters. Number six, facilitating cross border payments. Financial institutions can innovate in the space of secure and efficient cross border payments. Blockchain technology and digital currencies provide new ways for banks to facilitate more transparent transactions, thereby enhancing their value proposition to the exporters. Number seven, credit insurance and risk mitigation. One of the primary concerns for exporters is the payment risk. Financial institutions can partner with export credit agencies to offer credit insurance and guarantee products. This helps exporters to secure payments and expand into riskier markets with confidence. We're still on the opportunities for financial institutions. Number eight is enhancing supply chain finance. Supply chain finance allows banks to provide working capital to exporters based on the strength of their supply chain relationships. By offering early payments to suppliers in the global value chains, financial institutions can improve the exporter's liquidity and cash flow management. Number nine, trade advisory and market intelligence. Financial institutions can provide value added services by offering exporters market intelligence, regulatory guidance, and advisory services. These help businesses navigate complex export markets and stay informed on global trade developments. Number 10, collaborating with fintech firms. Partnering with technology firms helps financial institutions to leverage innovations like AI, blockchain, machine learning to streamline trade finance processes. This collaboration allows banks to offer more secure and cost efficient export finance solutions. The global export scene is changing quickly, offering financial institutions chances to innovate and expand trade finance. By expanding digitalization and embracing it, by embracing digitalization, sustainability, and supply chain diversification, banks can enter into new markets to support exporters and drive global trade growth. Who are the key stakeholders in the export process? Let's look at them one by one. The export process involves various stakeholders who play crucial roles in ensuring the smooth flow of goods and services across borders. Below are the key participants in the export ecosystem and their roles. Number one, the exporter. The exporters are the businesses or individuals who sell goods to the foreign markets. Number two, key stakeholder, the importers. The importers are businesses or individuals who buy goods from foreign suppliers for domestic use or resale. Number three, the banks and the financial institutions. They support international trade by offering services that help exporters and importers manage risk, um, finance their transactions, and secure payments. Number four, government agencies. The role of government agencies is to set regulations, policies, and frameworks that govern international trade and ensure compliance with national and international trade laws. Number five, trade facilitators. Trade facilitators are intermediaries who help exporters and importers navigate the complexities of international trade by providing logistics, legal, and administrative support. Number six, export credit agencies. Export credit agencies are government backed institutions that provide insurance and financial guarantees to exporters to help mitigate risks such as non payment by foreign buyers. An example is Nexim. Number seven, international trade organizations. These organizations work to promote free and fair trade. They facilitate dispute resolution and they provide global trade standards and guidelines. Examples are WTO and the ICC. Financial institutions play a pivotal role in supporting the export process by offering services that facilitate international trade transactions, manage risk, and provide financing to their exporters. Their involvement ensures a smooth flow of goods and services across borders while addressing financial challenges faced by both the exporter and the importer. They perform these roles by facilitating payments, One of the most crucial roles that financial institutions play in exports is ensuring that payments are made securely and efficiently between buyers and sellers. They do this through international payment systems, foreign exchange services, letters of credit, documentary collections, um, and other means of financing. The second role of financial institutions involves providing trade finance. Trade finance is essential in enabling exporters to fulfill large orders, to manage cash flow, and to sustain growth. Financial institutions offer several finance products to meet the working capital needs of these exporters. These products include pre-shipment financing, post-shipment financing, supplier credit, and supplier credit and factoring and forfeiting. And lastly, financial institutions perform the role of mitigating risk. Exporting comes with various risks, including credit risk, country risk, and currency risk. Financial institutions help mitigate these various risks through financial products and services. Some of these services include credit insurance, currency risk management, political risk insurance, export credit guarantee, trade compliance, and sanctions management. In conclusion, the introduction In conclusion, this module has provided a comprehensive foundation on the fundamentals of exporting and its vital role in international trade. You should have been able to gain an understanding of how exporting drives global economic growth and opens new market opportunities for businesses. It also presents benefits and challenges for businesses. By exploring the key stakeholders in the export processes, who we have mentioned as exporters, importers, financial institutions, and government agencies, you are now equipped with a clear understanding of the interdependent roles each plays in a successful export transaction. Additionally, this module has laid a groundwork for you to explore more advanced topics such as trade finance, export regulations, and risk management. With this foundational knowledge, you are better prepared to navigate the complexities of international trade, to identify export opportunities, and contribute to the growth of global commerce. Our company, Fortress 20 Global, is a trade and export management company based in Lagos, Nigeria, and we're dedicated to simplifying and enhancing intra African trade and global trade. Please note that this course we just concluded is the first module of a six-part module. To request the whole course, kindly send a message to the number on the screen. To request for bespoke training in other courses in international trade and intra-African trade, you can also send a message to the same number. Thank you for watching this video. Stay tuned for more videos featuring courses on global trade. Don't forget to like, comment, and share this video. I wish you success on your international trade journey. Bye.